beloved, hello, beloved students. Today we are proceeding with the basic accounting equation. We are still applying the double entry principle. What does the double entry principle say? The double entry principle says for every debit, there must be an equal credit. And for every credit, there must be an equal debit. It means if the first account is being debited, the second account must be credited. There must be a discrepancy in two accounts that you are working with. If the first account was being credited, automatically you have to know that the second account will be debited. If the first account is being debited, you must already know that the second account that I'm going to be working with is going to be credited. Now, today we are going to be working with the business of COVID-19 traders. These are the questions that are related to the business of COVID-19 traders. Now let us read and understand what does COVID-19 traders is doing in his business. Now, COVID-19 is a business that sells face masks and sanitizers to its customers. And COVID-19 traders is using perpetual inventory system and is not registered as a VAT vendor. VAT stands for value added tax. Now, the perpetual inventory system, it is also been known as a continuous inventory system. Now, as I have explained the double entry principle, let us go and read the first question without wasting any time. And then after reading the question, we will choose two accounts that are being affected by the question that we are about to read. And then go into our accounting equation and record the accounts. Now, the first question says, the first one, on January 12, 2022, COVID-19 traders bought stock from sanitizer store to the value of 12,000 Rand on cash to be sold to the business customers. Now, you need to know and understand the name of the business that you are working with. If you see the name of the business that you are working with in a question, regard the name of that particular business as being your business. Take COVID-19 traders as being your own business, and then see the questions in a perspective of saying, this is my business question, and I want to understand what is it that I have to do with these particular questions. Now, let us, in this scenario, let us say whoever who is watching this video, let us say COVID-19, it is your business. Work with your business questions or work with your business transaction. Let me reread the question, please. See COVID-19 as being your business. Let me start now. We are flowing. COVID-19, it is your business. You can even put your name in COVID-19 here and then see yourself working with your own business transaction, but take COVID-19 as being your own business. Let me flow now. Question 1 says, on January 12, 2022, COVID-19 traders bought stock from sanitizer store to the value of 12,000 on cash to be sold to the business customer. How many accounts are being created by this question? The word stock is the first account affected, and then the second word that will create the second account is the word cash. Now, you ask yourself, the word stock, which account under owner's equity, under asset account, owner's equity, and liability? We all know that the word stock is an asset account. It falls under asset. So what is happening within the business of COVID-19? The business of COVID-19 is buying stock. So when when the business of COVID-19 is buying stock, it means that the stock will be debited. The stock will be debited on the debit side of our inventory account or stock account. How will the owner of COVID-19 traders feel when the stock comes into the business? Check my cursor, check my mouse. The owner of the business will feel happy as more stock will be coming into our business. Right. We are going to be debiting the inventory account. When we debit inventory, we know that inventory is an asset, and when asset is increasing, asset will be debited. So we are done with the first account of stock. The stock in perpetual inventory system, it is also been known as inventory. But if you were using a periodic inventory system, the stock could have been recorded in purchase account. However, we are working with perpetual inventory system. Our stock will be known as inventory, but not stock. We record what we buy. If it's in a stock, we are going to call that stock an inventory account, or we are going to be recording that stock in inventory account. We are done with the stock account. Now, you know that the word cash that I have highlighted, it creates another account. Which account? Cash. We all know that cash is an asset and cash is money. And then remember, asset increase on the debit side and asset decrease on the credit side. So what is happening within our business? The word cash falls under bank. Now under asset here, we could have an account called bank. So because the money is leaving the business, we will have to credit our bank account. How does the owner of COVID-19 traders feels when the 12,000 is leaving the business bank account of COVID-19 traders? The owner of COVID-19 traders will feel sad. As you can see, the image here is sad because the money is leaving the business on the credit side, on our right-hand side. Now, when we come here, remember we have debited our inventory account. Is been known as an asset, and when asset increase is going to be debited. Now, the word cash falls under asset also, but specifically bank account. The word cash affect our bank account, but specifically our asset. What is happening with our asset account and what is happening with our bank account? Our bank account decreases which side? On the credit side. Now, the first question said nothing about equity account, that's why it's 0, and said nothing about liability account, that's why it's 0. Now, when we come in the middle of our asset account, it means that the first question only affected this asset account. It did not affect our owner's equity, neither our liability. So this two account is not affected by the question, but only asset account is being affected by the question. Now, if you can check under asset, we have plus 12,000 rand. It means we are receiving the stock, and then minus 12,000 rand, the money has left our business bank account. Let us go and record the second question. The second question says, COVID-19 traders sold merchandise to Mr. Gauteng province on credit for 23,100. Cost price of the goods is 15,800. So what is happening to the second question? COVID-19 is selling goods. Is selling what? Merchandise. To whom? To Gauteng province. How did COVID-19 sell these goods? Or how did you yourself sell these goods? Remember, COVID-19, you have to see COVID-19 as being your own business. So COVID-19 is selling these goods. How? On credit. When your business or when COVID-19 business is selling goods on credit, it means that the goods, the money will come later, but the goods will go with a debtor. What is the name of the debtor? Mr. Gauteng province. How many accounts have been affected? The word sold on credit, it's one word. It creates the first account of sales account. The word Mr. Gauteng is the second account. It is creating a debtor account. Mr. Gauteng is a debtor sold on credit. It creates another account which has been known as sales. Now let us go into our images, our pictures. These pictures, they also help us to understand what is happening with the questions here. When we sold or when we sell goods, we know that selling account falls under owner's equity. Which side? On our right-hand side, which is our credit side. So when we sell or Mr. COVID-19 traders sell goods, owner's equity account will be affected on the credit side, which is our right-hand side. So when COVID-19 traders sell goods, how does the owner of the business feel when he sells goods, even on cash or even on credit? The owner feels happy because he or she will be expecting to receive more money later of the goods he or she has sold. Now, the sales account is being credited and then equity is increasing on the credit side, and sales account also increases on the credit side. We are now done with the sales account. Let us come to the debtor, which is Mr. Gauteng province. A debtor is someone who owes our businessman. Now we sold Mr. Gauteng province goods that is worth 23,100. Now, since Mr. Gauteng province is owing us, and a debtor is someone whom our business is expecting to receive money from, we are going to be debiting our debtor account, and we all know that debtor is an asset. Why are we classifying a customer or someone who owes us as a debtor? And why are we classifying him as an asset? Remember the definition of an asset, but specifically a debtor falls under current asset. Now, a debtor falls under current assets because the definition of a current asset says current assets are assets that can be converted into cash in a short period of time. So as soon as this debtor can come back and pay, we are receiving money. That's why a debtor is being classified as a current asset. And as current asset says, that current assets are assets that can be converted into cash in a short period of time. So this debtor, when we debit the account of a debtor, we are saying the debtor owe us more. We are expecting to receive money from this particular debtor who is Mr. Gauteng. We're expecting to receive more money later from him. Now, the account to be credited is sales account. We all know that sales falls under owner's equity or equity account. So sales will be credited with a plus. We are still expecting more from this particular debtor who is owing us. Now, sales falls under owner's equity. We will have plus 23,000 under equity, and we will also have plus under asset account, which is 23,000. When we debit asset, we are saying we are still expecting to receive 23,000 from a debtor, name of the debtor, Gauteng province. When we credit sales, we are saying we are still expecting to receive more from that particular debtor because we have sold. Now, the question further says, cost price of the goods is 15,800. The second account is going to be open for account as such, but cost price of the goods is 15,800. Now, cost price, we know that the cost of sales is an expense account. We are going to be debiting our expense account. However, when we debit our expense account will decrease our equity account on the debit side. Let me come to the images and explain unto you. We are going to be recording under owner's equity account. All expenses account will be recorded on the debit side. You can see the face is saved. And all the income of the business that is coming inside the business will be recorded on the credit side. And when the income is increasing on the credit side, how does COVID-19 traders feel? The owner of the business will feel happy because income increases on the credit side. The more income is increasing, the more the owner becomes happy. But the more the owner pays for the expense, the more money is leaving the business. And the more the money leaves the business, the lesser not Africa traders, COVID-19 traders is going with less money at home. But the more income is increasing on the credit side, the higher possibilities that the COVID-19 traders is going to be going home with more money. So on this side, expense decrease the money of the business, and the owner feels sad because he is going to be going home with less money. But as much as income is increasing in the business, the more the owner becomes happy because the owner will be going back home with more money. That's how this owner's equity account works. Power. Now, under cost of sales, we know that cost of sales is an expense, and then we are going to be debiting the cost of sales because it's an expense. The goods are no longer within our business. They are gone out and are being classified now as an expense. However, we are going to be crediting the trading stock. When we credit the trading stock, we are simply saying that the goods that we have sold are going out from our business. That's why we have debited the cost of sales. Now, when we debit the cost of sales, what will happen to our owner's equity account will decrease on the debit side with 15,800. Money is going out from the business. However, we are still expecting to receive more later. Now, when we credit our asset account, what is happening within our business, we are saying we are no longer having that trading stock or the stock within our business. Why? Because we sold the stock. Let me show you with the image. Our stock is an asset. In the middle here, we can write stock. So when the stock is out from our business, when we sell the stock, we are going to be crediting our inventory account or trading stock account. We can see the stock is out and the owner is feeling sad because we have sold the stock. Now, that stock later will be classified as an expense, and we debit our cost of sales. The owner still feels sad. Thank you. Now, the question did not affect our liability account. We are also done with the second question. Let us go to the third question. What does the third question say? Now, the third question says, Mr. KwaZulu-Natal province owed the business an amount of 3,200 for more than 6 months. Write off the debtor account as irrecoverable. Now, Mr. KwaZulu-Natal province is our debtor. We previously sold goods to him, but he did not come back to pay for the goods that we have sold to him. He still owes us because we sold goods to him later, so he was supposed to be paying us. Then he failed to pay us for how many months? For more than 6 months. So for each and every business has its own policy. Now, according to the policy of the business, it is been said that if a debtor fails to pay the money of the business more than 6 months, that particular debtor must be written off as irrecoverable within our business book. Meaning, we are now removing that particular debtor. The name of that particular debtor is Mr. KwaZulu-Natal province. We are removing him. We are taking him out from our business books. We are accepting that we will no longer receiving that particular money that he owes us according to our policy. But in accounting rules, it is easy to write account of a debtor as irrecoverable. But in real life, it is not easy to write off an account of a debtor. In real life, we call a debtor each and every day. We send him SMSs, we send him messages to recall him that he must pay this particular account. But in accounting, when we say write off the account of a debtor, you have to know which account to be debited and which account to be credited. So let us go and write the account of a debtor as irrecoverable. When you write an account of a debtor as irrecoverable, you are going to open a new account, which is being called bad debts. In old accounting, this account was being called a bad debts account, but now the bad debts account has been called as credit loss account. Now, these are the similar account. They work interchangeably. they mean one thing. Now, when you debit bad debts or when you debit credit loss, this account become an expense. And then we all know that expense increases on the debit side. But as much as expenses increases on the debit side, what is happening with our owner's equity? Owner's equity account decreases on the debit side. So we will have to debit our expense account, and we know that expense decrease our owner's equity. That's why we have a minus. You have to know your rules. Now we are going to be crediting the debtors control account. Now when we credit, I was supposed to write credit, not debit. When we credit the account of a debtor, it simply means that we are writing him off. The money that he owes us from the debit side, we are taking it out to the credit side of a debtor account, which is been known as an asset. Right. That's how this question must be answered. Now, the question that we have just read did not affect our liability account. That's why we have 0 here. As time is on our side, let us just read the last question and run with an accelerated speed. Now, question 4 says, Miss Northern Cape purchased inventory for an amount of 56,300 cash and made an EFT payment into the bank account of COVID-19 traders. Now, the first account which has been affected by this question is the word inventory is creating the first account. We have an inventory account. The second account that we will be having is the word cash is creating the second account. We are applying the double entry. One question create 2 accounts. That is the meaning of double entry in simple way. Right. Now, who is buying? You need to ask yourself. Miss Northern Cape, Miss Northern Cape is purchasing. The word purchase can also be known as bought, buy, means one thing. Now, Miss Northern Cape is purchasing from whom? Is purchasing from our business. What is the name of our business? The name of our business is COVID-19 Traders. So it simply means that we are selling these goods to Miss Northern Cape. And Miss Northern Cape is the one who is purchasing goods from our business. It means that the money is leaving the business bank account of Miss Northern Cape. And that money is coming into our business. What is the name of our business? COVID-19 Traders. That's how you need to understand your accounts and your questions. All right. Now, Miss Northern Cape purchase inventory for an amount of 56,300 cash. Now, what is happening with our business bank account? We are receiving more money. How much? 56,000. The word cash is affecting our asset, specifically our bank account. So what is happening with our asset account? In the middle here, we can write our bank account. So what is happening with our asset when we receive money? Our asset is going to be debited. Money will be recorded on the debit side of our asset account, which is bank. Now, when we receive money, remember the name of our business is COVID-19 Traders. So when we receive money into the business bank account of COVID-19 Traders, how does COVID-19 Traders owner feels? Feels happy because more money is coming into our business. How much? 56,300. Of what? Of the stock that we are selling. How did we sell the stock? On cash. Right. Now we are going to be debiting the money that is coming in, 56,000 Rand, through the word cash. Now let us go and work with another account. Because we sold on cash, we are receiving money immediately, and that particular money will be classified as an income. So we are going to be crediting our income account, and we all know that income account falls under owner's equity, and the more income is coming into the business, as much as we debited our bank, the owner of the business was happy, and the owner's equity account will be credited. Still, the face is still happy. The face was happy when we received money, and then when we credit income, the face is still happy. You need to know your account. The first account was being debited, still happy. The second account, owner's equity, which is income, still credited, and the owner still feels happy. Now the account to be created will be income, and we know that the income account falls under owner's equity, and owner's equity increases on the credit side, and then owner's equity and then income account also increases on the credit side. So under equity, we will have plus 56,000 rand, and then under asset, which is bank account, we will have also plus of how much? 56,300. Did this question, the fourth question, affect our liability account? No, the question did not affect our liability account. That's why we don't have anything to write under our liability account. Now, thank you very much, students. We are so grateful to be working with you. Please remember, students, in order for you to become what we call an accounting buffet, an accounting shinista, we need to practice, 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 and practice. By so doing, we will become what we call an accounting shining stars. Thank you.